Blackstone is on the brink of collapse, even though it might not look like it. What you don't see is a house of cards built upon false valuations of real estate that can survive no longer. And this isn't something that has happened overnight either. Blackstone's demise was laid down years ago when they begun their disastrous rise to $1 trillion in assets under management, but the truth is now clear. For years at this point, they've been out raising capital, obscuring the truth from those sending cash their way, and leveraging themselves to the hilt with as much debt as they possibly can. And with all this cash, they buy homes, apartments, offices, and real estate of all kinds. What you probably don't realize though, and what makes the collapse of this all so inevitable, is that within this seemingly normal practice of investing into real estate, Blackstone have been adding their very own hint of scams. They've been artificially raising the valuation of their properties higher than the market would ever dare, and using this false data to get even more money and keep this charade going on. No longer is this a secret though. Now it's as clear as day. Blackstone is at the end of their tether. They can barely afford to hold on, and it's all about to come crashing down. And over the next 5 minutes, I'm going to explain everything to you in detail so that you know the truth once and for all. Sadly though, the truth is hard to come by on YouTube these days, what with censorship being so rife, and I'm ashamed to say that even this channel is not immune to that censorship, so there are some things I simply cannot say right here. But fear not, as I'll be revealing all to my free newsletter subscribers in exactly 5 days time. So for the full story, just click that link down below and get that full story for free. Now it's almost old news at this point, but Blackstone's flagship investment product, their real estate investment trust or Reit, has been suffering from a slow but steady bank run for over a year at this point. In November of last year, they had to close their doors to their investors, and when people came asking for their money back, Blackstone just said no. December then rolled around, and again they refused to allow investors to withdraw their capital. January, and there was no change. February, nothing new. And now we know the same has happened during March, April, May, all the way throughout the entirety of 2023. For practically an entire year, Blackstone investors have been running for the doors only to find them bolted shut. Many people like to point out how this isn't technically a bank run because Blackstone isn't technically a bank, or they'll point out how Blackstone have it written into their contract with their investors that they're allowed to do this and the investors have no recourse. But none of that changes the fact that Blackstone's flagship $100 billion Reit is dropping in value, and investors are trying to get out with all their might. And as if that wasn't enough, Blackstone has also officially defaulted on their debts. They were due to repay a $562 million bond in early March, and they failed to make that payment. And it was debt that they owed on a portfolio of European offices, and apparently the slow but steady decline of property prices has made those properties unprofitable, and thus Blackstone can't afford to pay their debt. They went to their bondholders and begged and pleaded for an extension, but their debtors refused, probably not realizing just how bad things had gotten for Blackstone. And of course, Blackstone are claiming that there's nothing to worry about, that this debt relates to a small proportion of their portfolio, one of their subsidiary companies even, and that they continue to have full confidence in their portfolio and its management team. But if this is no big deal, and if Blackstone is totally solvent as they claim, why didn't they just pay the debt off? If $562 million is just pennies to them, why did they default on the debt? Their lines just don't add up until you hear the next scandal that then followed to break. And that is that Blackstone's CEO and founder, Stephen Schwarzman, was paid out $1.3 billion over the last year for supposedly generating Blackstone so much in profits, and Blackstone paid out over $5 billion to their other shareholders over that year as well. Now, how is it possible that Blackstone had to lock their doors to stop their investors from running away, and then just a few months later, they defaulted on a $500 million debt if the business is so profitable that they can give out over $6 billion in dividends after making profit? The answer is plain and simple: corrupt accounting rules. Just like how SVBs and all those other banks collapsed, that recently came down to accounting rules. Blackstone is simply allowed to value their assets however they see fit. If they buy a building for $100 million and they claim a year later it's worth $200 million, well then it's worth $200 million, and Blackstone has officially profited at $100 million, and they can give those profits out to their shareholders and their owners. And they did this repeatedly over the last couple of years. They continually increased their valuations for their property right as property prices around the world were actually falling. Now, there are two possibilities here. The first is that Blackstone is the most incredible investors the world has ever seen, and even as average property prices in New York fell by almost 10%, for instance, Blackstone picked the right ones and saw their value increase by 5. Or there's the most likely outcome, that Blackstone are simply lying about their valuations, booking false profits, and looting their investors for all the cash they can. And as for Blackstone, it seems even they are losing confidence in their business model, and they just might be starting to panic. Over the last month or so, Blackstone has announced an attempt to raise a further $10 billion for what they call tactical opportunities. The idea being that technically they should be able to buy up distressed assets while prices are in their depths during the coming recession. But this raises the question, what if they're just trying to raise capital to keep themselves liquid, to keep themselves afloat, and to stop them from becoming the tactical opportunities for a better placed firm? And in another unexpected move, Blackstone announced that they are pushing for non-institutional investors for the first time ever. The company has always focused on the big fish, the hedge funds, pension funds, governments, and billion-dollar businesses, but now they're throwing their entire playbook out the window by targeting individuals instead of institutions. Again, this alone could be a non-story, but when taken along with everything else that's going on with Blackstone, this is just totally out of character. This screams of a business desperate to raise capital from anywhere they can, because if they don't, there will emerge massive problems. And while JP Morgan keep trying to channel money their way, other banks are doing the opposite, with Barclays downgrading Blackstone after their repeated blocks to investor withdrawals, and with the firm officially defaulting on their debt, who knows what other banks are going to follow suit. Of course, this all comes back to the fact that Blackstone has made huge profits from its real estate investments over recent decades, and now the real estate market is on the out, leading to independent news sites like this one speaking out about Blackstone's failure to repay their debt and what it says for a larger mortgage default crisis. Blackstone used to have more money than they knew what to do with, which is how they bought up over $120 billion worth of real estate over just a matter of a couple of years. And over the course of just months, it's all come to a grinding halt. And now they're selling properties instead of buying them, with one of their flagship properties in London worth £395 million being auctioned off. And the craziest thing about all this is that this video is literally the opposite of clickbait, as their failure to repay debts is actually worse than originally made out. Blackstone have defaulted on their $562 million bond based on Finnish and European offices, yes, but they've also been forced to enter special servicing of 2 other massive bonds, which means they couldn't abide by the original repayment terms for them either, but thankfully their investors allowed them to renegotiate. And how big are these 2 other bonds? Well, one is based on New York apartments and is worth $270 million, and the other is in Las Vegas and worth $325 million, meaning Blackstone is experiencing a mortgage crisis as we speak that is already larger than $1 billion, and it's only just getting started. And if they can't repay these loans, I guarantee there are more out there that they won't be able to repay either. And when their maturity dates come through, when Blackstone is expected to pay that principal back, that is when all hell will break loose. Now, this is where things get really weird, because fear not, Blackstone lovers, they've actually launched a new slant that some well-paid executives obviously think is really smart, but anyone who isn't 100% removed from reality can tell you is the worst advert you've ever seen. If you haven't had the honor of watching the entirety of the worst advert in the history of finance, I'll leave the full link for you down below. But for those who just want the cliff notes, well, here they are. That was real. That was not a fake out. It's not April Fool's. That is what a $1 trillion company thinks is good advertising. That's what they're spending money on, and this is their grand plan to get them out of their hole. It genuinely seems as though Blackstone think the solution to their $1 trillion problem is just to get young people to start buying into their funds. Wild, I know, but for some reason, Blackstone seriously thinks this is the angle it needs to save itself. So I thought I'd do Blackstone a favor and explain exactly why this advert is awful and why it will never work in a million years. Now, this awful advert might look like it appeals to 20-year-olds, but trust me, it doesn't. This is the best example I've ever seen of failing to keep up with the kids. No one young likes corporations anymore, and the best advertising we're seeing today is coming from individuals who just explain in a nonchalant, normal manner what their company is and how they run it and what it does. A day in the life of a young Blackstone employee video would have been been 100 times more effective than this, because no matter how purposely crap you make the camera work, it's still clear as day this is a $1 million video planned out by a man in a boardroom on the 60th floor of a skyscraper. But let's say the advert itself wasn't awful. Is the general idea at least partially solid? Well, fortunately no, because young people firstly don't invest into assets, alternative assets at all, and most of them are totally broke and struggle to even contribute to a pension, let alone throw money into a Blackstone Reit. Blackstone have completely saturated their market. They've blown a bubble up through fraudulent reporting, and now they're panicking, trying to keep it from bursting, and their solution is to target the demographic with the lowest average net worth around, the demographic that spends more than 50% of their income on rent and 30% on tax, so they literally don't have any money to throw into Blackstone. How this new slant and this god-awful affront to adverts ever got released is well and truly beyond me, but what is clear is that Blackstone is in trouble, and this wild attempt to drive new investment is clearly a sign of the insane mismanagement going on in this corrupt organization. And if you can see the way the world is going, you can recognize that more and more this global cabal is rigging the system against us, that Blackstone and co are let off scot-free no matter what they do. And if you're tired of being lied to by that system, my escape from that system came from building a digital business, and yours can too. If you're interested, I'm launching a 7-day challenge soon to get you kickstarting your digital business in under 1 week, and the winner actually gets $1,000 cash. So check out that link down below if you're interested.